We're looking at the oil prices right now. A lot of volatility due to Omicron. Oil certainly not the only sector seeing that volatility. Prices are up about 2% right now. Is this the time for investors to jump in, or are you concerned about demand with the variant?
Well, that's a good question. I think overall we remain very constructive on the U.S. integrateds and the E&Ps. Although admittedly, like you just said, prices are likely to be a lot more volatile in the near term than we thought previously, given the Omicron variant. But, our companies, they're very well equipped to handle downside to oil prices. And the market, we think, is also better equipped than it used to be to handle the volatility.
Let me ask you about demand. Oil prices, they've spiked incredibly over the last year. I have a look at regular unleaded. I go to the pump. It's about 50% higher. Are we reaching peak oil? Is this where demand's going to kind of reach its peak, or is there still more demand out there that will push prices higher?
Well, I think, it's all up in the air now, given where the Omicron variant is. We're early and it's still unfolding. We're still assessing the data. We certainly don't think we're at peak oil right now. But I think between seeing how Omicron variant is going to play out, as well as seeing what happens with the OPEC Plus meeting, that's really going to determine where supply and demand is going forward. In terms of demand, we're really focused on civil aviation. That is really the key driver to increasing oil demand growth next year. And governments, they've been very quick to enact travel restrictions internationally. And so we'll have to see kind of how that turns out. But, our oil strategist, Amar Singh, depending on how the Omicron variant turns out, he could see anywhere between 500,000 barrels a day up to 4 million barrels a day of demand destruction in 2022.
A lot of eyes on OPEC, obviously, and we have to see how they take this variant. So I have to ask you, we don't know which way the variant discussion or the trends are going to go, but do you have any picks that you would select either way, whether Omicron continues to hurt demand or it impacts demand, or if demand continues to go up, or even if we reach that, that benchmark of $100 a barrel oil?
Yeah, either way, we're going to see volatility in the near term. But we still think that medium-term oil demand fundamentals, they're intact. So because of that, we really favor the large cap E&Ps over the integrateds at this time. In particular, we favor the large cap E&Ps because they have lower overall corporate break-evens, somewhere around the $30 to $40 range, which can withstand a lot of downside to oil price in the near term. But they also have the oil torque because we think that medium-term fundamentals are still very strong. And so if you look at the large cap E&Ps, we think now is the time. It's a great buying opportunity in order to look at ConocoPhillips and Pioneer Natural Resources, both very high quality companies. It's also a good opportunity to add to those higher torque names such as Devon Energy and Marathon Oil that also are very high quality.
So, Jeanine, we're going to have to let you go in a second, but I have to ask you again. I'm going to press you on this one because you kind of dipped around this one. Could we reasonably get to $100 a barrel oil? Is that something we could see in 2021 or at least the first quarter of 22?
Our forecast doesn't call for $100 oil, but I think that there's a lot going on in the near term. We do have strong fundamentals supporting oil demand outside of this new Omicron variant creeping up. And, we're just going to have to see. But we think that demand is going to recover eventually. We don't think it'll be $100 right now, but we'll have to see what happens with OPEC and with the new Omicron variant.